And as we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, again, if you've been watching the market over the last couple of weeks, pretty much gone nowhere. Friday was a bit of a down day, like the first time we had a bit of a jump in volatility. But essentially, you can see over the last couple of weeks, it's kind of been trickling upwards more than anything else, but essentially kind of staying in a range, nothing too exciting. You can see basically over the last couple of months, it's kind of just been staying here. This is again where we always start, the S&P 500, which is the SPY ETF. If we look at the NASDAQ, which is the QQQ ETF, you can see similar story. The graphs are always going to look, for the most part, fairly similar. The only one, again, as always, that's a little bit different is IWM, only because it's not anywhere near its all-time highs like the other two are. But as far as the graph, it looks exactly the same in its range. It's just obviously still below where it was. So not a lot of volatility in the market, so we had to look around for something to trade. We are going to go to GILD. So let's take a look here. You can see we are past earnings, which is good. The next earnings is way up here, so not going to really be a problem for us. We'll most likely get out of there. If not, beforehand, we'll make sure we close this trade before we get to earnings if we're going to be that far away, which is August 7th. And essentially, you can see here, if I look at kind of where we've been over the last few months, you can see right here, if I just go like at the bottom of kind of where we've been, you can see we're around $97. And if I go to the highs over the last few months, you can see right about 120. So for me, as a trader, I look at this and I say, hey, look, volatility is at 48. So high volatility compared to the market, which is around the teens or around 20. For my assumption, it appears to be in a range. So if I can get a trade where the range is around 97 to 120, my assumption is moving forward over the next couple of months, it's going to stay in this range or at least bounce around, but end up in that range where I can take a profit. And of course, if this trade is going to go past August 7th, we're going to look to get out of it. So if I go to the trade page, what I'm going to do here is I'm actually trading this one, 61 days, which tomorrow will be 60. Remember, we want to be in the 30 to 60 day range. But I'll show you these don't appear to be very liquid. Now the market's closed, so it's tough to say when the market opens how liquid these will be. But if I just look at them off the top and I go like essentially to the at the money strikes, which is right where the stock is, around 110, you can see these are way too wide. They're like $4 wide. Now again, the market's closed. This could all change on Monday. But at least for this video, I'm going to go to this one. Monthlies are generally always more liquid than weeklies, no matter what we're talking about. And if you look here, if I go to the at the monies, which is around the 105, 110, you can see these are more like 50 cents wide, right? 105, 110, around 50 cents. This one's a little wide to $1. I'm going to assume that come tomorrow when the market opens, these are a lot more liquid. If they aren't, that'd be up to you not to make this trade, but that's my assumption. So assuming everything is liquid tomorrow, we're going to go into 61 days. Now, one thing to notice here is these expire August 15th. That's what this means. Remember, earnings was on August 7th, but it's only about a week after these. So my assumption also is by that point, either I'm out of this trade because it's a winner, or if not, I'm going to look to close it before earnings on August 7th is where we're looking to make this. So I've already set this thing up for us. Remember, I had 97 as my low and 120 as my high. So those are the two strikes I'd like the stock price to stay between. So I sold those two, put and call. I bought the call and put $5 away to create a $5 wide iron condor. As long as I collect at least $1.65 or more, again, 33 cents per dollar width is my minimum. So 33 times 5 is $1.65. As long as I collect at least $1.65 or more, and assuming this is liquid tomorrow, this will be my trade in GLD for tomorrow. I am excited to let you know I've completed a book that is now available to everyone that wants to get it called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero as far as knowing absolutely nothing about options all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody. that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being what is an option. You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals, and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.